Alrighty, folks. June 5th, YouTube, Patreon, whatever you are, welcome to the live stream today. If you hear me fine, if you can see the picture fine, let's begin. Alright, good to hear. Let's begin here with the SPY at the 5 minutes chart. So today we talked about this dynamics. We got a little pump here before the open because NVIDIA and other chip names coming back. What's really interesting is the same behavior of, in the beginning, we see profit taking by futures traders who've been playing the market overnight. And once that happens, we see a retest to 529 and then, boom, it launches all the way higher based on the usual suspects that you see here. The AI mania chips back on track again. Big caps back on track again, at least most of them. A little bit of lag by Apple here, but software is also catching a little bit of a rebound. ServiceNow up about 3 to 4%. That's going to help a lot. And then you got CrowdStrike up 11% after earnings. So you have this corner, the usual suspects playing out. With them, of course, comes these hot names in industrials that have been just grinding higher, like Eaton, but got hit as of late, just a little bit, not anything significant. What's really interesting is healthcare still holding okay. Gold miners coming back up a little bit. There's a little bit of a reception of the dollar and bond yields going down, at least today. So when we begin with the dollar, I think that the dollar is beginning to find a footing here. And you can see in the daily chart that if you look at the behavior or the Vortex indicator, maybe we're about to have a bullish crossing. Didn't get it here. Maybe we'll get it here. So this is the last attempt at around the 23rd of May. There was an attempt here. We went a little bit higher, but we never really closed decisively above the top of the breakdown candle. So there is another attempt here. So not to play the inverse in the shoulder. So it's keeping this neckline. And if it can, and it begins to move higher, it's absolutely weird for folks to see that, wait a minute, why is gold performing when the dollar is going up now and underperforming when the dollar is going down? I would say that so far the dollar is underperforming and gold still in this consolidation range, not doing anything at all, just consolidating at the top of the 50. So we have a sort of a back and forth battle in the dollar. I think that the rebound is still not strong enough to get us above the top of the breakdown candle and reverse anything. So I think that if gold moves higher out of this pattern, so if gold gets out of the bear flag pattern, makes a higher high, let's say above 2,365, if it moves to that point, then gold is saying, okay, I've seen enough from the dollar. I think it's going down with certainty. So the next trade for the dollar will be down in or around this support here. 103, 172 basis points. So the dollar is weak despite the little rebound here and perhaps an attempt, but it's going to be a long shot, and that's good for the market. Now you look at the 10-year yield. That's still flushing down, and finally we have a reaction by the market that responding to bond yields, but I mean, the devil is always in the details because the XHP goes down to the lower Bollinger Bands. We get these rebounds and then they fail. So the reaction is okay. The XHB, what's really interesting, if you look at the IYR, today that one is not performing. So yesterday it did, today it didn't. And there are mixed signals by these yield-sensitive names. KRE, same thing, just a tick higher. So I think that the VIX carries more weight right now. And the VIX closing below the 20 days moving average, at least today, will be confirmation that we're probably going to head back to the lows and we'll see a continuation to the pump that we got today, at least in the chip mania, the big caps all the way till Friday. So we'll see what the closing going to get us today, but the number is 1283. We're below right now. If you look at the hourly chart for the VIX, you'll probably try to rebound by the end of the day. So what you're going to see probably at the end of the day here, since we've already rallied, instead of the consolidation they usually get in the middle of the day, we already rallied. We get down, and then we have the pop. I think that we might soften a little bit by the close as the VIX comes back. So it tries to make it come back a little bit. So here we can argue that this is sort of a rising wedge on the hourly chart, or we might see a retest to 531.50, if not 530. But we have to look at, of course, what the market maker is looking at, because that's going to dictate the move. Look at the SPY really quickly at the options prices. In the calls, we see some volume here already accommodated. Maybe they'll do the 534, but I doubt the market maker wants to pay the 532 and above. So if there was a pullback, it'd probably get us all the way down to 531.5, just to neutralize some of these calls above 531. And then when you go to the puts, if you go down to 531, 532, there's pretty much non-existent open interest at this point. So you got the room as the market maker today to drop it down to 531. Can we get a squeeze to the upside? Yes, but they got to buy the 535. They got to go to tomorrow's expiration. And they're not doing a lot here. Everybody's doing the 0 DTEs. So you see the volumes here higher. They got to buy the 535 to push the market higher. So we have to look at the SPY with the expiration date of today, see what they're buying here. We have the 535 put. So we see some puts coming up. Any 535 calls, 34 calls, not really. So we could stall here, folks, and they might begin to accommodate some of these puts that are showing up right now, 35, 33. So that's what I would expect at the end of the session, that we see a little bit of pullback just to neutralize these big contracts above 532. Anyhow, it's not a really interesting tape at all. Maybe Tesla beginning to move a little bit out of that consolidation range because of time. I think there is the vote coming up really soon, and there's a big move coming. But this is going to be really interesting as the implied volatility dropped a lot for Tesla. So I know a lot of you have been waiting to trade Tesla. So let's see if we have cheaper options now that we can take for, let's say, June 21st. You'll see that the implied volatility is still at 46 here, but we don't want to be close to the money. We'll go a little higher. This is still 49. If we do the puts, go about $5 below the 170. That's still 47. So, I mean, they're a lot better than the 80s and 90s we've seen before. But maybe it is time to begin to think about formulating a strategy for Tesla. It could be a straddle, by the way. It could be both of them, but for the 21st, it's a little expensive here. If we look at Apple, any updates, since Apple is going to be an important mover here still, but the upside is limited. I know folks want to go to the 200 now. You might do that as a lotto, but I'm interested in the reversal trade for now, because that's going to be the juiciest one, rather than whatever limited gains that we have here as the our side becomes really overbought. NVIDIA, I mean, until we get to the split, folks, I know a lot of people want to short it, and yesterday we got a short on it on the options strat, an unusual trade, but the bull flag playing out, there's no sign here. And NVIDIA has this squad of names that really followed it, such as Qualcomm, AVGO, TSM, not so much AMD, Micron, yes, ARM, yes, but you find that AMD, Intel, Texas, ADI, the rest of them kind of trade aside from NVIDIA. But you have these four here, AVGO, TSM, Qualcomm, ARM, following NVIDIA. And these are still strong, folks. I know a lot of you want to short Qualcomm and all of that, but it is still in the strong. I think you need to wait for NVIDIA to come back down a little bit. Anyways, I don't want to babble a lot here. We're just going to do Bitcoin before we take your questions. And here it's the same thing, folks. If we clean up the chart, I think that we have this inverse head and shoulder playing out. And if we close above, just clean this up here. If we close above this formation, the high here was 71,560. The high here, 71,980. So I would say, if we take the high here, the close, 71,400. So we'll call it 71.5. 71,500. If we close above, I think that you will see another surge in Bitcoin. And in that case, you want to be long Coinbase. That could be an option. MicroStrategy, although that's going to be a little expensive. So Robinhood, of course, comes to mind. But they're all pointing out, the indicators for Bitcoin right now, pointing out for a pop higher if we close above that number. So we'll keep an eye. But folks, we'll go back to the SPY, take your questions and comment what you guys thinking for today, and we'll just take it from there. I want to clean up this chart a little bit before we begin and keep it at the 5 minutes chart. Okay. Hey Mav, could you review your rationale for the IGV trade? Thank you everybody for joining, by the way. Fan, Christina, Chad, France, everybody. Could you review your rationale for the IGV trade you just closed? Yes, IGV, I mean, we can have more gains. I'm not saying that we're against it, but we have plenty of time, by the way. The problem is we have resistance also at the top of the breakdown candle, right? So in the hourly chart, we have 79.78. We're kind of struggling with it right now, so that's part of the rationale. Of course, if you close above, that means that the gap is the next target, and you can have more gains to come for the trade. But since we were just looking for an oversold rebound, we got it. The trade gave you, I mean, the entry cost was, let's see what it's trading at right now. IGV 80 calls, we paid 60 cents. We get away with more than 100% worth of profits. That's good enough for the trade, right? Your goal from every trade is to close it at a profit, not become a billionaire. So since we made enough profits, I'm cool with it, and we got resistance, so we just close it right here. Okay, what do we have here? We have Dash, 21st, 115. Yes, I'm thinking about it. Not in it yet, but I think it is a good trade. The only concern that we see from the behavior today is it got to the 20 and it kind of pulled back. And the high today was 113.81. So what I'd love to see between now and the close, what I'd love to see is a little bit of a recovery, since DoorDash is doing the right thing, by the way. It is closing the gap that it opened in the morning. And let's say that the close here was 11.34. And it's giving you an opportunity. So if you, in the morning, if you thought that it went far above and you couldn't catch it, now it's coming back all the way down here, closing the gap. And if we see it going higher by the end of the session, let's say you see that little gap here in the 5 minutes chart. So we have the close of this candle, 112.19, and the high here, 112.14. So we'll just call it 112.19. If we trade back above, and I would say that even if we just take this consolidation range here, then I'll be in DoorDash, no doubt about it, because it's actually doing a beautiful formation. Popping higher, retesting the 20, coming back, retesting that gap. If it's all good, and then higher we go, it means that it gathered enough support. It's going to crack above the 20 and continues all the way to the 115 line. So yes, I'm probably going to be into it. I would say that for now, if we keep this support, 11.34, I would say pretty much I'll be in it before the end, for sure. Hey Mav, how do you see the action in refiners like MPC today compared to the USO? Contemplating cutting loss on MPC 185, 621. Well, you have to make a decision this Friday, and I'll give you the details. I'm sorry, folks, for the delay, but I'll give you the details, and you're not going to be lost. The problem with the trade is, I mean, the cut loss you'll see in the video is 172, a daily closing below 172, which we never got. Right now, we see crude outperforming RBOB. So the refiners are the laggards today, but if we continue to see another day of follow-up, WTI and Brent going higher and the RBOB going higher again, because see, the RBOB is way oversold and got to close the gap here. So there is a possibility that it could move higher again, try to challenge the top of the breakdown candle here. So I'm not going to give up on it until Friday or until we get the cut loss at 172. I did average down yesterday, and I think this is a high beta refiner. So when it moves, it moves. And if it gets just that little bit of fuel by the RBOB moving higher, 1 to 2%, I think it'll be back at 180 in no time. So I don't want to give up quite yet. Give it a little bit till, let's say, Friday, because that's my time cut loss. There's a price cut loss, there's a time cut loss. The price is 172. The time is June 7th, if we're not trading above a certain number by June 7th. Okay, let's do the USO, see what we have here. USO is back on track. I mean, it's just doing an oversold rebound. Don't expect that we're going to surge higher from here. We're just doing an oversold rebound. Maybe we'll have another follow-up tomorrow. For now, if you look at the hourly chart, So far, so good because retested the lows today and then came back up in a bullish reversal candle. So if we just zoom in a little bit here, that's a bullish engulfing candle, bullish reversal candle. And now we're struggling with the gap that we opened here in a bull flag. And if we pass, we're probably going to head back 73-ish will be a target. And if we get to 73, I'll probably close the calls that I got on because that's going to be enough. After that, we'll face some resistance. Okay, what do we have here? So if we have a pullback in the Qs and the SPY at the end of the day, is it worth putting in some TQs buys for tomorrow? Or is it better to keep money in the NVDL into Monday split? If you have the NVDL, I mean, NVIDIA is the one that's leading the queue, so you don't need the redundancy. If you have NVDL, you're good to go. It's fine. Just keep it as it is. I would say maybe if you can sell some calls on it, just pocket some money because it is a little overbought on the hourly. And last time it was this overbought, we got a pullback here, see? So here, overbought, got a pullback. And then we got some overbought conditions here, got a pullback. Here, got a pullback. So we're going to go overbought, meaning that we're going to get some pullback, maybe closing the gap at some point. But that's going to happen Friday, Monday, who knows? But when I see this kind of behavior, I'll probably sell calls, covered calls, just to capture some premium. That's assuming, of course, you have 100 shares or more. If you don't, then you can't do it. You can just book profits, take half, that kind of thing. But NVDL, if we look at the calls for the 7th, if you sell the 79, it's a beautiful contract. $220, and we're selling here. There we go. $214 or so. Yeah, let's call it 215. That's not bad for a stack with trading at 69. Add the money and you just take that. And worst case scenario, you close your trades at 69. If you want to do the 70, it's not bad either. 70 will give you about $1 and 70 cents a piece. That's not bad. So that's how I would manage it. But NVDL is good enough. You don't need the TQs, to be honest with you. Okay, any management advice for SBUX like you managed, like you mentioned yesterday? Gotcha. Okay, so Starbucks, if you got the 80 spread, so I think you're on the right track. So here's the problem. We'll talk about this in the tracker video. Again, and I apologize, folks, for the delay. But it doesn't matter if you're in the trade or not. The educational value from the discussion will help you in futures trading, whether you do it in the trades that I give or your own trading. But the cut loss target was the half of the body of the candle. That's 80.67 from a weekly standpoint. So if we close above for the week, the trade is gone. Now, the trade was already gone before that because the entry was bad. We got 3 big candles on the daily chart after the entry. And that's going to kill the trade that we had in the 75. Now, it's not totally dead. It could come back, but you're going to need to average down. Now, I wouldn't average down until we lose 80.67 if you have the 75. But better yet, what I would do is if you have the Starbucks, the 75 for 21st, you realize that, let's just get rid of this here. The 75 has probably 15 cents left, if you're lucky. I'd rather take that off the table and then use the money to buy the 80 instead. And then sell again the 75. And then we'll have a $5 spread here. And it'll cost us about 80 cents a piece if you take the 15 from the sell and the loss that we pocketed. So you got to knock it down even more to about 65 cents a piece in the entry for the 80 puts. And this one has a higher degree of profit than the 75 right now, which has only 4%. It doesn't mean that it's going to be a loser. For all you know, Starbucks could flush down, but it's going to take extreme scenarios for the 75 to come back. The 80.75 is the more reasonable contract right now. And again, if it becomes profitable, so sell the 75, your entry will be about 60. We just talked about how that's going to happen, 60, probably even less than 65, 60. But anyways, if you just go down to 76, 77, they'll make up for the losses from the 75 trade and then some. So you'll sit on profits. And that's how I'm thinking about the trade right now. And of course, the reason why we see a pullback in Starbucks because it got really overbought in the hourly. But you need to see the loss of this support here, because what it might do is just go down support, then come back up. But if it comes down to support, rebounds, it fails, then you got topping in a shoulder, even more for confirmation that, yeah, you got to enter a trade against Starbucks here. And you'll find support in or around this zone. You see the wick here. So the low would be 76, 70. That'll be the profit target range. And if you go back to the option strat, the low 76.70. Let's see here, 76.70 will be up 200%. That's assuming, of course, you're paying what you're paying right now. But here's what we're doing actually. In reality, we're doing 30. So your profits would be in the 230 range, 300% range. Right, so this is how I manage the trade. If you make 300%, it made up for the trade, the loser trade, and then some. Anyhow, I think I'm being clear here. Dropped a message for you in the Top Gun chat, Nick. Let's see that message. Let's see that one. If it's not a long one, we'll take it. Okay, a few things. I see you go live here and open my Chrome tab, which is my work tab, and is not paying a monthly membership to see your Top Guns YouTube. Are you losing money with this? Just wanted to bring this to your attention. No. So there is a loophole, okay? There is a loophole, but this is the most convenient way that we can do it. And again, I trust you guys. You guys are supporting the channel because you want to support the channel. You're not really paying for the benefit and all of that. So I'm aware of that. In the future, we're going to fix it by using an email invitation for the live streams. So for now, it's okay. You can watch the streams anytime you'd like. You can open the tab and watch it live or watch it later on. That's okay. But at some point, we'll do it via email. For now, this is the most convenient way. And again, you guys are the top supporters of the channel. I know that we were all on the same page here. Nobody's going to look to do anything cute. So thank you for bringing that to my attention, though. Okay, how is GM not a mess? I hear only bad things about sales. So GM and Ford, by the way, both of them are not doing so good. But you got to understand that the government is pumping a lot of money in these. And you can't really beat the credits that they're getting and all of the help from the government. So for now, to me at least, the formation and to look at the daily chart, it appears that we have a double bottom. And if we challenge these highs, you actually want to go long GM, because once you take these highs, it'll run. And you have the weekly chart. Clean it up a little bit here so we can see it better. The weekly chart, again, consolidation in a bull flag. And it's working at this bearish momentum, but boy, if it just takes the highs, it'll fly again. So I wouldn't short GM right now. Ford, it's the same issue that we have with GM, but it's a little weaker than GM. And I think the problem with Ford is this F-Lightning truck. The sales are absolutely horrific. Everybody I talk to in a Ford dealership says that nobody wants to buy these things. And that's the problem with it. With that being said, folks, the technicals, that's a different thing than the fundamentals. And right now, you have this downward channel. And if you break above, I think you'll challenge the 12.5, 13 mark again. So I would look at them as opportunities to go long, at least for a trade for now. At some point, if you're a fundamental investor, then and you think that Ford is going to go down or GM will go down, then you open a short on it and you just hedge via call options. Of course, the challenge with that is, can you time it right? Anyhow. Sorry, I meant your rationale for entering the IGV trade. I don't like the music, not the rationale why you click. Gotcha. Okay. Why we got into it, it's the oversold, right? So we got a wick, huge wick on Friday, come back. So it tells us that the chart went below the Bollinger Bands. And usually when you see violation outside of the Bollinger Bands like this, clean up the chart here. A lot of folks say, I don't care about the Bollinger Bands. They don't matter, Maverick. They do. Sometimes they give you easy trades on a silver platter, like this one here. Sometimes they give you one here, right? Here on the short side, here on the short side, here on the long side. And specifically, the behavior of the candle because sometimes we've seen violations, like when it keeps going higher or it keeps going down outside of the bands. Usually it goes higher more than it goes down outside of the Bollinger Bands, but the behavior of the candle is also important. So here, topping candle, confirmation. You take the shot right away. Here, you see the pin, the comeback, and the hammer. You got to take the shot. When you see it look like this outside of the bands, you got to take the shot. Here, we've seen it again, the hammer look. So we had to take the shot, and now we played off. That's good enough for me. Some folks will wait till here, but this is good enough for me. So as a trader, you might open, for example, if you want to keep it, you might open the lows here would be 81, so you might open the 82 and have a spread on it. We did this strategy of the spread in DraftKings. So one we closed, the other one we're keeping. So there's a little bit of redundancy here, but you see the same look in DraftKings. So here, notice that if we clean up the chart, you got a violation outside of the Bollinger Bands. The behavior of the candle wasn't a hammer or bullish hammer that we've seen buying. It actually went down after an attempt for a recovery. So that behavior tells you that, okay, you want to wait a little more till you get some stabilization and then you enter. And I think that we got the entry okay here. In other instances, for example, let's see if this chart will show a behavior here. We have another good example. So you got outside of the Bollinger Bands, and then you got a positive reaction. Okay, that's a buy. You got outside of the upper Bollinger Bands, you got a negative reaction. That's a sell. So there's a way to look at the Bollinger Bands, and I think it did help us in entering the IGV trade. Okay, back to my drawings here before we lose it. Okay, thoughts on Lulu play for tonight. So I updated you guys in the options tracker for Lulu. So for now, it is roll the dice, right? Because we anticipated at least that we go to the 20 before earnings. And had we done that, the trade would have been closed. We'll be done with it. But now that it's stalled here, and the trade, if we look at it here, let's do a butterfly call. And what we have, Lululemon. There it is. And we've done the 300 calls, sold the 20, and then bought the 340. Right now, it's sitting pretty much as close as we got it. So if you want to get out of the trade right now, there's no loss incurred at all. If Lulu drops after the report comes out, it's going to be a problem because the trade will be gone. It's over. It's going to lose an incredible amount of volatility and it's going to be done. If we move higher, and let's say it's not an excessive move above 320. So if we just go to 319, 320, but not way above 320, then the trade will be profitable. So I'd leave this up to you. I haven't made a decision, to be honest with you. On my trade, I haven't made a decision. The rationale might be, since we're anticipating a close before earnings, and it didn't happen, why not just take the money and run? And let's do something different with Lululemon, such as buying the 320, selling the 340, and we don't need this anymore. But that's going to cost you a lot. See, it's $1,800. You can go out of the money even more and try to do it and be queued, but I think the butterfly was the best structure, so either you keep it or you close it. It's the decision time today. The technical formation alone is bullish, to be honest with you. Technical formation alone says that we have a bull flag here, and we're beginning to see bullish momentum showing up. So it's just we don't want to see a huge pop in the butterfly. We need to stop at the 20 days moving average. If that is the case, then the trade would work out ideally. Okay, on April 19th, SMCI had a massive red candle. It was the day where I think you put 100K and got 20x return. Could you discuss what to look for in the SMCI to spot a day like that? We actually put 200K on it, and this is April 19th. That day, all of the semiconductors were going down. It was an ugly day for the market all in all. So we were here. It was actually a Friday. It was the 19th, and we got a gap down right off the gate. We lost this important support that we've done here. It wasn't just super micro, by the way. I wasn't just looking at super micro. I was looking at the entirety of the market, and there was an inclusive weakness. So luckily for us, of course, we got this big drop down candle. And we knocked down multiple supports. In a highly volatile name like this, you can score 1,000% return. So it was a highly confident trade But it wasn't just looking at the chart of Supermicro. It was also the market all in all. So if you look at the April 18th, 19th, if we look at what the Qs did in April 19th here, you see that we got the gap, right? Whoops. So the behavior of other charts, the indices is also important. And once you crack below the scamps, then you're going to see an oversized reaction by the algos. So I think that it was multiple things, but it's worthy to maybe think about it in not just from the SMCI chart alone, but also the indices. Another indicator is the VIX, what it was doing that day. We just took the highest volatility, implied volatility ticker, which was SMCI. Okay, we have how long should we hold USO? As I said here, USO. If we do the hourly chart, you can hold it. If we close above, let's say 71.81, I'd hold it till tomorrow. In any move to 73-ish, you don't have to go to 73.21 exactly, which is the number that I got here. If you go to 73, I'd close the trade because I'm just looking for a rebound for now. Okay, we've done Lulu, we've done GM, we've done Supermicro, USO. There were some large red candles. This is a follow-up to the question before in Tesla. Yes. So again, it was a multiple indicator type of thing in the charts, but also in the options market. We've seen some open interest, high open interest underneath all of these critical supports, the gaps. And once these were taken out, there was an inverse gamma phenomenon. So it wasn't just the technicals alone. It was also the mechanics of the market in understanding the formations of the open interest. And of course, not just the open interest alone, but the live flow. If we see them pushing the tape down, as they're trying to do right here. If we look at the expiration, of course, the one-day expiration. Now we see some calls showing up. See the 533, 31 beginning to show up. But the flows also will help you out in determining which open interest will be hit based on this feedback. And the premiums matter, of course. The higher the premium, the more important the trade is. Not an easy answer. So I apologize if that wasn't clear. Thoughts on the NDX? Nope, we'll leave it alone for now. NDX is, I would say, a long, not a short, at least for now. It's going to get a little too excessive, though, because of NVIDIA. So I would say focus on NVIDIA more than the NDX, because if NVIDIA, after the split, becomes way too hot and pulls back, I think it takes down the NDX with it. But until that happens, until the split is out of the way, I think the NDX is don't touch it. Hey, Mav, when you compare calls and puts in the SPY, you seem to look at OI only. What about the daily volume? Daily volume matters. Here it is lagging, though. It's about 10-15 minutes lag. The volume is important in telling us which volume is predominant, right? So which volume closer to the money, of course. Which volume is more predominant? And the volume here in the call is more predominant, so we see more activities. The problem with that, though, the assumption, of course, becomes, the calls will be accommodated in higher chance than the puts. But the problem with the volume is counting in what's being opened, what's being closed. And you can't distinguish which volume is for closing, which volume is for opening. So for all you know, a lot of this volume could be closing the open interest. A lot of this volume could be just getting in and out. A lot of this volume could be opening and staying. And this is why the importance of the volume is minimal. The open interest is more important. But you got to understand that higher volume, is it in the calls or the puts? In the calls, then the likelihood is the market maker will accommodate the calls versus the puts. Okay, Nick, thank you so much. What graph is better? For the XLY, MCD, or ROST? Or which do you suggest that might have a recession theme? Well, McDonald's has a problem. And with the wages, all of the edge that McDonald's had in the past, forget about it. Ross performs in an environment like we have right now, where the consumer is getting weaker, but everybody got jobs, they got credit cards. In a recession, people lose their jobs. So in a recession, you want to look for themes such as in healthcare, where the spending is happening majority by the government for the pharmaceutical companies, and there's little disruption because of a recession. So the XLY is not good. That's cyclicals. McDonald's, I think, lost the edge. Ross will have a problem in a recession. So none of these are really good picks for a recession. I would think that you'd go with the XLV, but not just the XLV alone. You got to pick the individual names because the problem with in a recession scenario and an overall drop in the market, they sell the ETFs too. So you see these ETFs coming down too. So you have to stick to the individual names. I think that healthcare offers the best refuge. And depending on how the dollar and yield is going to react, could be some commodities like gold, silver, and even copper and some grains. But for now, I think that we're not in that point, by the way. But it's worthy to have some big pharma companies in your portfolio. Okay, what do you think about the 614 or 621 calls on SMCI? I think the stock may have exhausted negative sentiment last several days. Or does it make sense to wait for macro data later this week and next? Look, Supermicro is not really sensitive to the macro data. Supermicro is being guided by the sentiment in NVIDIA. And not just NVIDIA, but the entirety of the chip sector. So lately it was just NVIDIA alone performing. The rest were getting hammered. Today, all of them caught a bid. And that's helping Supermicro. But again, it's not a strong reaction here. And if you look at the support and resistance, I want to clean up this chart a little bit so it wouldn't be confusing. We're not above the 20. We're just rebounding from the bands. And if we consolidate here and you don't get major pops all the way to the upper Bollinger Bands fast, the implied volatility will be against you. And again, Supermicro requires an investment. Okay, it's not, premiums are not cheap. So you have to be really, really sure. So for example, this was a short trade. You got the double top, lowest support. Okay, you take it all the way down. And he got a really good trade on it from here, even though he got a little rebound, but he went all the way down to 745. Now, it's not really clear that we have a trade on it. Maybe we have somewhat of an inverse and shoulder playing out. But until you take, here, clean it up a little more, until you take these candles, which we're struggling with this one right now, top of this candle and this one here, all of these are reactions we've seen selling. And the algorithms will take them the same way. That this is a point of resistance where you book profits. So you have to pass above these 1, 2, and then we can say, okay, we have an inverse on the shoulder, and we're going to head back to close some of the gaps here at 865. So you probably take the 850, 900 or the 800, 900. There are multiple ways we can play with it that way. But for now, it's not giving us a decisive signal yet. And I only say that, by the way, because it is expensive. So it was a cheaper stock, I would say go for it, but this is really expensive. Okay, GM CEO says they're favoring electric cars in the futures. In the news program I saw last night, they're all saying that, but the sales are not pretty good. People are not buying these cars. Even though, if you looked at the hearing yesterday with Janet Yellen, you got Maserati Mansion hammering her about the credits for EVs. Because they were talking about the batteries have to be originated domestically to give the credits, but Janet Yellen was giving credits for batteries with higher components from China and all of that. But at the end of the day, the reason why they're being flexible with the program and giving the credits even though the batteries are coming from China is because they're desperate. They want to sell these cars, and nobody wants to buy them right now for two reasons. They're not really that reliable, at least perception-wise, and it's a huge, big-ticket item. And nobody has the money to spend on a car right now. So it's not just EVs, but specifically EVs. The entirety of the auto sector is weak. But the stock performance, that's different. GM, Ford, those are going to play based on the buy and sell options, sentiment. So until you get a report that solidifies that we have a bomb, and I think we have one in the F-150 electric at least, until we get that, you're not going to see a stock reaction. Erica, could you help me out understand the pros and cons of doing a call spread on the NVDL to maximize money into the split or next week? So if you have NVDL shares, you can sell a covered call, but it requires you having at least 100 shares. So when we talk about options, folks, what you're buying right now, let's say you're buying the NVDL 70 calls for the 21st. The quantity is 1. That's a contract. Each contract has 100 shares. So this is the value of the contract. 100 shares, meaning that you need to have 100 shares before you sell one option or one contract, excuse me, because each one has 100 options. So if you don't have the quantity, 100 or more, if you have 100, you can sell one. You have 200, you can sell two. The idea behind that is, I see the chart getting toppy at the risk of pulling back. I'd like to capture some of the profit that I made here before, let's say, if we get a pullback in VDL, we get a pullback of 6 to 7%. I'd like to lock some of these gains that I got. And this is a good way to do it. You go with a contract that you're okay selling your shares into. So let's say I have 100 shares of NVDL right now. Bought them 66, 67. The question you have to ask, since now we have 100 shares or more, but I only have 100, so I can sell one. If I have 200, I can sell two. So in this case, I have 100 in this example. The next question would be, what price would I be okay at selling my shares at? And if the answer is 70, then okay, I'll sell the 70, because the consequences of if the stock trades above 70, you're going to have to sell your shares at 70. But again, you don't mind because you're selling at a profit and you captured this credit right here. We're selling, we're not buying. So you keep that credit from selling the 70. And you closed your shares at a profit because you sold at 70. That's the whole point of selling a covered call. Now, there's another strategy, which is you sell a covered call. Assuming, again, you have 100 shares of NVDL, so you're selling the 70 call in this example, and then you're financing a put at the 68 or 67, and this expiration date could be longer, but you want to knock some of the expense in this insurance policy. It will cost you $380. You want to knock some of that down, so you sell a call, and you knock it down to 185. Let's call it that. Might sound a little complicated, but if you're not experienced in these strategies, look them up, do some paper trading on them, and you'll find out that it's a must-have skill in locking profits and also hedging for cheaper, because you could buy the naked puts to hedge. If you think that NVDL will go down, you can buy the naked puts for next week. 68 will cost you $370. I'd rather pay $180 for them, not $370. So multiple strategies here, but we can expand on this conversation in a separate video, folks. Okay, what memory supplements do you take? None, really. I'm just hoping that it's going to stay organic. Anyhow, hey, Mav, I've been meaning to ask you, if I can't sell options and only able to buy calls and puts, is there something else I can do to follow your spreads? By the way, most brokers, all you have to do is just fill a questionnaire, and they'll give you access to selling calls or puts. So, I mean, I have my nephew who's a teenager. He's not even 18. And he's trading stocks and doing spreads and all of that. All he had to do is just fill a questionnaire. So, if that's not the issue, if just you don't want to trade spreads or you can't for whatever reason, how do you follow the spreads? It's really hard to say. I would say that if you only open naked calls or puts, then you have to be closer to the money. It's a shame that you can't open spreads because they're fantastic strategies. They reduce the entry cost, maximize the profits. I would say that try to see what your broker is doing here, because it's not that hard to have access to opening spreads. Okay, Erica, that's okay. If you sold it, that's another strategy, by the way. That's another hedging strategy. If you have NVDL and you went way too high and you think that, okay, this is getting a little excessive, another strategy of hedging is booking profits. Boom, you're done. But if folks want to hold into the shares, then the covered calls or the collar strategies become really valuable. Here we have a question about Airbnb and AXP. So Airbnb, again, it's killing me that I didn't get this video out. Because we keep adding trades and I want to cover all of them. But Airbnb, the cut loss is a close above the 20 days moving average. We don't have it yet. And the Airbnb trade has a lot of flexibility that we can play with in opening a butterfly spread and doing a lot of things to reduce the entry cost. So for now, absent of a close above the 20, and even if we do, since the 20 is coming down here, I think that it's worthy to keep this trade since it's not way outside of the money. We have 145, we're at 145, so I'm going to kill myself today to finish that video. And you'll have the guideline. It's going to be clear to you that this trade has a lot of flexibility. Unless, of course, we get a big pop of 2-3%, then we're done. But there's also a strategy to hedge against that. So that's Airbnb. That's okay. AXP. Moving a little slower, and it is the strong, but let's clean up the chart a little bit here so it's not messy. We have the topping in the shoulder playing out, retesting the lows for now. Momentum is getting weaker. We have the 230, 220 puts. I want to keep it for a little longer. I'm not seeing anything here that says that the trade is going to go in the contrary or AXP will pop higher again. So I want to keep it for a little bit. But again, as I said before, the confidence level in this trade is not so good. So in a rating from 1 to 5, I'd give it 2.5. And the reason AXP is so strong, it's been strong for a while. So we have the 230 and we sold the 220. Right now we got $1.50. I think that's almost at a profit here in this trade. So up to you. If you think that this is not a good trade, the setup is not favorable, then just book the value that we have right now and move on. On the weekly chart, though, here's one I want to keep AXP for a little bit. Notice that the bullish momentum began in November. We got an insane rally since then. Now we're seeing bearish momentum showing up. I want to give it a little time to play out. See if it gets us down to at least the 20 weeks moving average. That's not unreasonable to have it pulled back to the 20 weeks moving average. It's been a while since we've retested this average. So I'm going to stick with it a little more. Let's go here with CZR. Maverick, CZR, and MGM are better. Maybe customers still have balances on their credit card during the summer. I know the win is okay, but win stock never really gave us that crack that we were looking for at 98.50. So we never got the trade. And the problem with win is fluctuates with China. MGM did a buy of the Cosmopolitan here. And I think that MGM, from a technical point, is looking a little better than win for now. You see the positive divergence here in the RSI. So if we have to go with any of these, I'll pick MGM. Caesar more volatile, so it could be fun via options, and it is playing out already. So I think the catch-up trade will be MGM. I'd go with MGM since the options are better here, better priced than MGM. Let's do a trade on it. I like this trade. MGM. The 21st, just to give us a little bit of time, and then we'll do... We don't want to go too crazy. We have a gap here. The low is 40.79. We have a bunch of wicks here, so we know we have some resistance we're going to have to deal with. The pin here looks pretty good, so 41.5. Here's what I would do. I'd go with the 41 and then sell the... Let's see if we can get some credit here. 25. Okay, good. Actually, since it is cheap, I'll just go with the 41 naked. And if we go higher, I'll sell the 45 at that point. But 41 looks good to me. 80. You can do the 40 and then open a spread on it at the 44, for example, but it's not going to give you a lot. So I do like the 41 naked for now. 80 cents, not bad. If you look at Caesar, so we're looking for a 3.6 move, 29% chance of profit. If you look at Caesar, you do the same move, and we take the 38. No, that's too much. 37. Yep, 37. A similar move, 31% chance of profit. It'll cost you about $113. Let's call it 110 with no commission. So Caesar is more expensive than MGM. I'd rather go with the MGM. Good trade, by the way. 80 cents, 41 calls, June 21st. In Australia, many shares don't have options. If I sell call on an equivalent index, yeah, that's the problem. So in this case, you use the old school hedging strategy, which is booking profits, taking half, having a stop loss, upgrading your stop loss from one level to another if you can't sell options. At 10:15 Pacific time, there was a small but sharp sell-off in futures in some stocks. How to know if a drop like this is the start of a larger sell or just a temporary shakeout? 10:15 a.m. Pacific time in the futures. That's an interesting observation, my friend. Let's see here. We're at 10:18. So here, we've seen a little bit of a, or here it is, right? A little bit of a flush, higher volume. I'm assuming that we got some macro data out. That's the only explanation for that. And if we look at here, 1018, let's see what the dollar did. No reaction, a little bit of reaction here. So that tells me that maybe it was a macro data. If we look at the 10-year yield, let's see here. No reaction, so it's not the 10. VIX. Could it be the VIX? Yep, the VIX popped higher. So there was something, there was some algorithmic reaction to a piece of data or a comment by the Fed zombie or whatever. And it caused that spike in volatility, but it then came back down. So I think you have to look at the VIX when you see something like this. You look at the VIX and give it a little time. If it's not breaking out, if it's not giving you a reversal sign, in let's say 5 minutes at least. See, in the 5 minutes, it's a nothing burger. So you use the 5 minutes to see if at least it's a notable candle or not. And this one was not. It just flipped right away. So I think you check with the VIX when you see something like this. Okay, thoughts on 5 earnings tonight. That could be another one of those discount retailers that could benefit from the consumer weakness, even though the problem with these discount stores, the 99 cents, Five Below, and even Dollar General to a certain extent. I mean, you saw what happened today with Dollar Tree, the LTR. It kind of flushed right away. The problem with these guys is the input cost is high too. So they can have an increase in volume, but since the input cost is high, the margins are not good. So I cannot really speculate. In thesis, it looks that maybe we'll see some volume showing up in the sales and it'll be good for Five Below. But boy, I cannot guarantee what the input cost is going to be. If we look at some financials here. Let's see last quarter. Revenue was 1.3 billion. That's good. So we're seeing volume increasing, but this is the fourth quarter of 23. So holiday season. Operating income, seasonality will push that up, but Q3 was not good. Q1 is what we're going to be against, 42 million. And then the net income was 37. Got to beat these numbers. Okay, year on year, got to beat these numbers. And I don't have any information that says any way or the other. In technical formation alone, it's not looking good. Attempt for a rally, pullback, that's not good. So that's my 2 cents. I can't tell you if it's going to go up or down. Fundamentally, there is a case for it, but because of the input cost, I would say that let's see what the options pricing look like. And if they're not good, you just take a pass. Do a post options trade. So here, if we, let's say, take the 150, a lot of folks buying the 150, we're going to pay $200 for those. For the 21st, on a 132 stock, implied volatility is 65. You always want to do this, by the way, in option strat, because the implied volatility will go down. So take it down to the 40s and see whether you're going to be profitable or not. And you can see here that if you don't get a pop of 10% plus, you're not going to be at profits. So think about that. Do you think it's going to be 10% up or down? If it's not the best trade price-wise. Okay, let's go back here. Is it too late to get into crowd? It's still off the all-time highs. I think crowd was a squeeze. Okay, so I don't think it was a phenomenal report, to be honest with you. It was just a squeeze, and I think it's going to stop at the top of this breakdown candle here, at the most. Okay, so I'm not really enthusiastic about cybersecurity right now. I think that Palo Alto gave us enough warnings. CrowdStrike was not that good, so I would not chase it right now. I think it's a short squeeze going on. You see the volume here. Probably a lot of folks shorted beforehand. Now they have to get squeezed. As a trader, you can be an opportunist. You can ride a short squeeze till Friday if that's what you're looking for. You can buy the 340, 345, and just roll the dice with that. But as far as the buy, not right here. I need to see it closing above the top of the breakdown candle on a daily basis, and then I'll say, okay. I'm thinking about entering Snow 140, 145 call spread as the stock seems oversold. How does the trade look for you? Snowflake is interesting today because it is the week. Every other software name is moving higher. Snowflake been weak for some reason. It just keeps getting weaker. It is oversold, so I agree with you that there is a case for it. But since it's not giving us this hammer look outside of the Bollinger Bands, it could be catch a falling knife. So I'd rather go with something that already showed signs of recovery, like ServiceNow, like Adobe. Even Datadog showed some signs of recovery today. So I'd rather be with these guys. Snowflake, it could be a falling knife, excuse me. And you enter right now, it goes down to tomorrow and into the Friday close. And understand, because it already went down this magnitude, we could see more selling into the options expiration. So I get the idea that it is the oversold, the laggard, but boy, since it is underperforming in a day like this, when the rest of software is doing okay, I'll skip. I'd rather go with the strong. So maybe Trade Desk is a little too strong right now, but it's still in the daily chart. It's not overbought. And you can chase Trade Desk all the way to the upper Bollinger Bands. Think about the 100 calls. That could be an option. Think about even if you're looking for value, Autodesk, bruised, battered, and now it's capturing some momentum. I think those are better plays than the catch falling knife in Snowflake. By the way, you see the look here? The inverse hammer? These are gifts. When you spot them, you take them. Okay, thank you for your response on GWRE and Hack. Made a small profit in and out. Good for you, good for you. I'm glad that you did. Firewater, Mav, do you think the market break higher? It is making new highs today. Some are saying the market will move higher into the next 2 months. Yellen just juiced the market too. Look, we're moving higher because of the big caps. The big guys here. I mean, when Taiwan is up 6%, NVIDIA is up 4%. We're talking about a $2.8 trillion company. Of course, that's going to lift the indices. And again, the question becomes what happens after the split of NVIDIA. I think there was a lot of excitement here about the split. For now, since we have a comeback of the AI names, I would say the Qs will have an easier time moving higher than the SPY, which is relying on the rest of the market. So that's what I would say, that concentrate maybe on the Qs, on the chips for now. So a strategy that I've floated before is you go short the RSP, you go long the SOXL. And that way you have somewhat of a balanced exposure. We have a lot of mines coming, folks. It's not just the split coming out from NVIDIA, but we have the FOMC coming. I think June is make or break. Either you're going to do the cuts or not. We have the jobs report coming out Friday. We have a lot of things that could be market movers. But the AI is a different sphere on its own. It's an ecosystem within its own. So you'd realize that even if we have a bad report or a good report for the payrolls Friday or CPI, there is some sort of immunity here. And this immunity, so long as these stocks perform, they keep the indices higher. What would take them down? I think NVIDIA has to show signs that sales are slowing down, that the margins are slowing down, and now, at least for now, we don't have indicators for that. We have trends going down, but we don't have an indicator of when the margins will go negative, when the sequential growth will go negative. We know it's gonna at some point, but timing it, that's the challenge here. In the meantime, we have opportunities every day in the market, folks. Trading, investing, shorting. You saw stocks going down 20% in a single day recently. You've seen stocks going up 20% in a single day. You've seen trades up 100, 300% in a matter of a few days. Lots of opportunities. So we don't want to be fixated on one outcome or one trade alone. Okay, let's take here, Mav, any trade for VLO? Not until we see the RBOB coming up. So for now, if you have MPC, I would say that's enough for the refiners. Maybe tomorrow we'll get some signs of life in the RBOB. Once we do, we can go back with VLO because it is a fantastic trading instrument. The calls appreciate in value with 100, 200% easily. But we need to see some sign of life in the RBOB first. And right now, last time I checked here, it is still lagging crude. Let's do one more, and then we're going to go to hop in Discord. Thoughts on BASE today? Base. It's Couchbase. Look, with an oversold reaction like this, I'll take the shot on a squeeze. that it's going to perform when we go with a squeeze. Now, let's do some pricing and see if we can find attractive pricing or not. You got to go with the 21st. And you don't want to go close to the money because whatever you spend here, if it goes down, you lost that. You're never going to get it back. So if you go with the calls, we probably want to go with something crazy like the 30, which is going to require a 39% move, but you're only spending 30 cents. So if that's your loss, it's only 30 cents, 25 cents. If you spend more, though, here, I don't think it's worth it since it is speculative in nature. I'd go with the 30, just a lotto ticket. Okay, so if Yellen trying to time the market to hold it high until the elections, what shenanigans would you expect for her to utilize the abysmal recent bond auctions and indicators to look rough? We're going to have those auctions, and she's reducing the supply so the results will look better. And that's not going to change. I mean, that's the Treasury already decided that the supply will be low. Unless she changes the policy. So that's going to be a concern, but not the top concern. I think the top concern would be what happens with the Fed policy and inflation. For now, they're all going to try and manipulate the market higher. That's their job. The landmine would be that rates being higher for longer, that something breaks between now and then. I think that's the highest risk. It's not really the auctions. It's not really if the Fed hikes. I don't think that's going to happen. With the recent drops in energy prices, I think the biggest risk that we have right now, and the market kind of picked up on it in the last few days with these defensive themes, is if something blows up between now and then. That's the problem. Can we play a pullback into Friday? For now, we're not seeing any signs of it, my friend. So the hourly is a little overbought, but it can get a little more overbought tomorrow. So I think tomorrow, if we're trading at these RSIs, then yes, I would take a shot on a pullback on Friday. But for now, I think the market is a little too strong because of the chips, and it did retesting here as resistance. I think we have another retest coming at the 531, but maybe tomorrow would be the time to get into it. You have to look at the VIX too. If the VIX breaks the 20 days moving average, it's not going to be good for such a play. So for now, it appears they're going to close below. So maybe the VIX flushes down again tomorrow, and we see more excessive reaction in the SPY going higher. Then we'll take a trade Friday, rebound in the VIX, pull back in the SPY. Anyhow, folks, I don't want to be too late for Discord, folks. What would be the clear signal a break in the system is happening? VIX, yes. VIX, but you'll see some positioning before that. Weird options market activities, bigger bets, hundreds of millions of dollars. You will see lack of correlations, all of a sudden, divergences happening. So there are signs to that, but we've seen some of them, by the way. We just haven't seen the VIX being under a bid yet. But we'll see again what happens Friday. For now, folks, let's segue to Discord because we have other members waiting right now. But thank you for joining for this session, and we'll talk to you again tomorrow. Take care.